Good day, everyone. The podcast will be based on LOLC Finance and their financial performance. LOLC Finance PLC is one of the Sri Lankan leading non-bank financial institution, recognized for its strong market position and customer-focused innovations and strategic growth. The company has expanded through both organic growth and strategic acquisitions, including the integration of Singapore Financial PLC in 2019 and acquisition of Commercial Leasing and Financial PLC in 2021, strengthening its market presence and service network. This evaluates LLC Finance PLC's strategic positions based on the audited annual report financial year ended in 31st of March 2026. This analysis examines the company's strategic directions, competitive positions, their leadership styles, and their organization culture and financial performance using recognized strategic frameworks such as best analysis and VRI frameworks and Porter's five forces. LOLC Finance is a diversified financial institution offering leasing, loans, deposits, SME finance, factoring, operation leases, credit card, and digital financial service. During the year 25 and 26 financial year, the organization had recorded profit after tax of approximately 27.4 billion, while their asset has increased to 558 billion. And customer deposit exceeded 271 billion, and shareholder equity exceeded approximately 155 billion despite the completion of the major share buyback. This result indicates strong financial performance and successful strategic execution during Sri Lankan's economic recovery period. The strategic direction focused on five priorities: sustainable growth, financial inclusion, digital transformation, operation excellence, and disciplined risk management. Rather than competing through only pricing, LOC Finance differentiates itself through innovation, financial solution, and customer accessibility. Its five strategic business units: SME finance, personal loans, gold loans, alternative finance, and others, allow management to allocate resources effectively while responding to different market opportunities. Gold loan recorded nearly 78% growth, while alternative finance expanded by approximately 37%, demonstrating management emphasis on high growth and underserved segments. Let's look at how external environment has impacted to LOC Finance and their operations. Having examined internal strength, it's equally important to consider the external environment in which LOC Finance operates. Politically, conditions improved considerably during the year, supported by greater policy stability and the continuation of IMF program. This more predictable policy environment reduced uncertainty for lenders and borrowers, allowing LOC Finance to join long-term lending and investment decisions with greater confidence rather than reacting to short-term policy shifts. Economically, Sri Lankan recovery gathered pace with declining inflation and lower interest rate, creating a far more favorable lending condition than in previous years. Falling rates reduced the cost of funds for the company while also making credit more accessible and affordable for customers, in which turn supported loan growth across segments such as SME finance and gold loans. Socially, demand for SME finance and financial inclusion continued to rise, reflecting a broader national push to bring underserved groups into a formal financial system. This encouraged LOC Finance to expand services especially targeted entrepreneurs, women-led businesses, and rural communities, reforming the company's position as a financial institution that reached beyond traditional urban and bank customers. Technologically, the organization continued to invest in digital transformation and strengthening platforms such as iPay, which is very convenient to customers to use their funds opening a fixed deposit and getting a loan and gold loan and AI-enabled lending processes. These technologies reduce turnaround times and low operation costs and improve the customer experience, which is ultimately impacted customer satisfaction toward the LOLC finance operation and their brand, and positioning LOLC finance to compete more effectively against both traditional banks and newer fintech entrants. Environment. The company expanded its environmental social governance called ESG finance and electrical vehicle finance offerings, aligning its lending activities with Sri Lanka's broader sustainability goal. This not only supports the traditional to greener transport to business practice among the customers, but also strengthening LOC Finance own environmental credentials as a responsible lender. The final pillar of pest analysis, which is legal, LOC Finance continues strengthening its governance framework while complying with Central Bank of Sri Lanka regulations and Personal Data Protection Act. Maintaining strict regulation compliances, particularly around capital adequacy and data protection, remaining essential to preserving customer trust and avoiding regulation penalties, is an increasingly scrutinized finance sector. Internal analysis. The VAR framework highlights several sustainable competitive advantages. The LOLC brand is highly valuable because it has earned customer trust over the decades. Its nationwide branch network and customer relationships are difficult to competitors to imitate. Strong capital advocacy, advanced digital capabilities, experienced leadership, and sophisticated risk management system further strengthen competitive advantages. These valuable resources are effectively organized through clear defined strategic business units, allowing the company to sustain long-term performance. Let's look at the Fortress 5 forces. Fortress 5 forces is a strategic framework used to analyze the competitive intensity and attractiveness of the industry by examining key forces. Threat of new entrants, bargaining power of the suppliers, bargaining power of the customers, and threat of new substitute products, and intensity of rivalry among the existing competitors. Together with these forces, determine how much pressure existing on a company's profitability and long-term position within the industry LOLC operates. Alongside the macro environment, the competitive dynamics of the industry itself shapes LOLC finance strategy. Competition within the non-bank financial institution sector is moderate because several established players compete for their market share. New entrants face significant barriers due to regulation requirement and capital adequacy standard from the government authorities. Customer possess moderate bargaining powers because they can choose among numerous financial institutions. Funding provides influence borrowing cost, encouraging LOLC finance to diversify funding through deposits, borrowing, and debentures. Competition from commercial banks and fintech firms remain ongoing challenges, making innovation and customer service essential sources of differentiation. Ultimate corporate strategy. Building on industry context, LOLC Finance primarily follows a differentiation strategy by offering innovative products including iPay, Islamic finance, and gold digital loans. It also applies focused strategies by serving SMEs and rural communities and underserved customer groups at the corporate level. Data diversification reduces business risk through multiple revenue streams, including leasing, loans, deposits, factoring, Islamic finance, operational leasing, and investment properties, and digital financial services. Strategic investments in technology and diversified funding further strengthen long-term resilience of LOLC finance corporations. Leadership and governance and culture of the LOLC finance. None of this would be possible without strong leadership behind it. The board, chairman, and CEO emphasize sustainable growth, innovation, and customer values. Independent directors, the audit committee, integrated risk management committee, and enterprise risk management framework, strength, governance, and accountability. Organization culture promotes innovation, continuous learning, and customer-centric decision-making. Employee numbers has increased from 5,053 to 5,468, while personal investment increased significantly, demonstrating that employers are considered as strategic assets. Ultimately, financial performance confirmed the effectiveness of the company's strategy. Profit after tax reached approximately 27.4 billion, while asset has exceeded 558 billion. Customer deposit has also surpassed 27.1 billion, and shareholder equity remains strong. Asset quality improved significantly, and stage 3 loan reduced from approximately 9% to 5%. Capital adequacy ratio remained comfortable above regulation minimums, with Tier 1 capital of 23%. Earning per share increased from 0.7 rupees to 0.8, while net asset value per share from 4.5 rupees to 6.5 rupees, reflecting sustainable profit and effective risk management. The earnings growth is also reflecting market valuation of the company. LOLC Finance trades at retail price to earning ratio of approximately 5.6, and mid of 2006, company market capitalization has raised at approximately 165.5 billion. Underscoring continued investor confidence in our company's earning quality and growth trajectory despite broader market volatility during the year. Finally, looking ahead, several opportunities are likely to shape LOC Finance next phase of growth. Vehicle financing is expected to expand following the liberalization of vehicle imports, opening up a segment that had been constrained for several years. Digital finance services will continue to scale, building on a momentum already created by platforms such as iPay and digital gold loans. Greater adoption of artificial intelligence also expected to improve credit decisioning, fraud detection, and operation efficiency across the business. Beyond this, continued semi-developments and ESG-linked financing offer further avenues for sustainable, inclusive growth in line with national economic priorities. At the same time, management must remain alert to a number of risks, microeconomic uncertainty, potential regulatory changes, and intensifying competition from both commercial bank and fintech companies will require the company to stay agile and responsive rather than complacent about its current market position. Overall, LOC Finance demonstrate how clear strategy, direction, innovation, effective risk management, and customer-focused diversification come together to create sustainable competitive advantage. The organization has successfully aligned strategy with execution, producing a strong financial performance while supporting financial inclusion and long-term value creation. Continued investment in technology, people, and sustainable finance is expected to further strengthen competitive positioning LOLC Finance to sustain this growth trajectory well into the future. That brings us to the end of today's analysis on LOLC Finance PLC. Thank you so much for listening. I will catch up you in the next episode. Thank you.